Jamila. I'll be doing accounting paper one. It was written at the beginning of, earlier this year in May, and I will be doing paper one. I will start with inventory and VAT. Now we have information relating to Boilers Biltong. Boilers Biltong is a locally run business that sells biltong and specialized biltong knives from 3 different stores. They use periodic inventory system. Now, that information is important to tell you how to calculate cost of sales. When they tell you that information, you must just know that for me to calculate cost of sales, it will be equal to opening balance plus your purchases, you minus your returns, you minus anything that was damaged or any loss of stock, and then you minus your closing stock. That's how you will calculate your cost of sales. And I left something out there. Before you minus your closing stock, you will add things like your carriage on purchases. You add things like your custom duty, which is import tax, and then you minus the value of your closing stock. That's how you will calculate cost of sales. That is the only reason that will tell you periodic inventory system. Except for that, periodic inventory system means cost of sales is calculated periodically after stock count. And then they say they are a registered VAT vendor on invoice basis. That simply means VAT is calculated when the invoice is issued or received, or when a credit note is issued or received, not when the payment takes place. So when the payment takes place, the only thing you need to take into account will be any settlement discounts. Now let's get to the inventory system, which is the first part, which is question 1A, 25 marks for 15 minutes. You are told that your bullet biltong, they value their stock of biltong using first in, first out method. First in, first out method means the first stock to be purchased will be the first one to be sold, and they have decided to use the weighted average method for knives. So for biltong, for stock of biltong, they use first in, first out, and for knives, they use weighted average method. A unit consists of one knife or 1 kilogram of biltong. Let's go further. They say stock records for the latest financial year end, which is the 29th of February 2024, were as follows. They gave us biltong in kilograms. We use first in, first out method. You will notice that they said the business started operating with 6,400 kilograms of biltong that had cost them 544,000. Now that was the first one to come in, and therefore it will be the first one to be sold, right? First in, first out means that. So this will be the first one to be sold. They gave us the units as well as the rand value. This is our opening stock. And purchases during the year amounted to 20,000, which is the number of kilograms that were purchased for the year. On the in May 2023, they purchased 13,000 biltongs or kilograms of biltong at 80 rand each. In August 2023, they purchased 3,000 biltong kilograms of biltong at 95 rand per kilo. In December, they purchased 4,000 at 90 rand per kilo. Now they say here 5,000 kg, 500 kg purchased in May was returned to the supplier as it had not been ordered. So this was from the May purchase. That means from the May purchase, we no longer have that 13,000. We now have 13,000 minus 500 kilograms. These were returned to the supplier. That's why we minusing them. They are no longer available to be sold. And then on in Roman figure number 4, they say in August, 250 kilograms of the May purchase. So this again is from the May purchase was thrown away as it had been incorrectly stored. What I'm going to do is from that 13,000, I will also subtract 250, meaning that from that 13,000, I will now be left with how many? It gives me 12,250 kilograms that will be remaining of that, which will be at 80 rand per kilo. And then they say local farmers deliver the biltong to the storage warehouse for free. During the year, 20,300 kgs worth of biltong was sold at 250 rand per kilo. This represents what has been sold. Question, what will make up that 20,300? Which units were sold first? It is the 600 from the 1st of March, which is the beginning of the year, 1st of March 2023. It'll be the 6,400 kgs. And from May 2023, it will be the 12,250. I will simply add those to check how much they're giving me. So it is 6,400 plus 12,250. It gives me 18,000. Remember how many were sold? It is 20,300. This gives me 18,650. Okay. That means from August 23, remember this needs to give us 20,300. So from August, let's see how much we still need. From August, we still need 1,650. Do we have enough though? It looks like we do because there were 3,000 of that 3,000. Only 1,650 kgs were sold. Now, this will form part of cost of sales. So this will be cost of sales. Remember what cost of sales is. Cost of sales is the cost price of goods that have been sold. And for us to find this cost price of goods that have been sold, we just need to find the cost price of each batch that was sold. You got it. Before I can move on to knives, let me see what the first question was all about. All right. Refer to information relating to Buller's biltong. This question consists of two parts, which is part A and part B. And inventory system, we are dealing with biltong, where the stock system or the method is first in, first out method. And we use first in, first out method. We need to use it to actually calculate cost of sales. Remember what I said cost of sales is? Cost of sales is the cost of goods that have been sold for the kilograms of biltong sold for the year ending 29 February 2020. Boom. Now you have an option here. You could have drawn your timeline. I love the timeline because it makes things so easy. However, I didn't use a timeline here. I just used the table method starting from the beginning of the year. And I had 6,400 kgs, which cost 544. That 544,000 will be part of cost of sales, will be added to the cost of sales because that is cost of goods that have been sold. How do I know the 6,400 kgs were sold? It's because we are using first in, first out method. So the first ones to be purchased were the first ones to be sold. Opening balance means they were there at the beginning of the year. They're from last year. So when we start this year, those will be the first ones we sell. The second ones that we are going to sell will be the earliest purchase, which was in May. And in May, originally we had 13 units. We had to subtract the 500 as well as the 250 that were damaged, meaning that we are only left with 12,250 kgs of biltong on, and all of them were sold. Please note that these 12,250 kgs of biltong had cost 80 rand. So to find the cost price of those biltongs, I'm going to take this 12,250 and multiply it by the cost per unit of 80 rand. That will give me the cost price of these units, which will be 980. Remember, in total, we sold 20,300 kgs of biltong. Now, that means 1,600 of those kgs will come from August. August, we had 3,000 kgs of biltong, and we only need to sell 1,650. Now, let's look at the cost price of this stock of biltong in August. It was 95 rand per kg. So this one will be at 95 rand per kg, which will give us the cost price of 157,750. Note that this will make up the total units that have been sold, and that will be 20,300. Now, to get the cost price, you will simply add the cost of all these units that were sold, and that will give us the cost price, which will be 1,680,750, which is just the sum of all of those. That's what you needed to do to calculate cost of sales. We together? You sure? There's another way for calculating this cost of sales. Some would have started by calculating the value of closing stock first. And how do we find the value of closing stock? You will take units at the beginning of the year, which was 6,400. You add all the purchases and you minus all the returns as well as damages. And that will be 6,400 plus 20,000. And your returns was 500 as well as 250, which was the damaged, and that will give you units available to be sold. Of these units that are available to be sold, we only sold 20,300. That means the remaining will be the difference, which will be 25,650 minus 20,300, and that'll give us the value of closing units, and that'll be 5,350. Now, to find the value of your closing stock, you look at your last in. And when you look at the last in, the number of units that we purchased last were in December, and there were 4,000 of them, meaning that of this 5,000 units that we have left, 4,000 of those came from your December purchases. And because that is what will form part of your closing stock. And those purchases cost how much? They cost 90 rand. So we will find the cost price of those as 360,000. They are part of your closing stock because those were your last purchase. They were last in. Last in means they were part of your closing stock because the first in are out. First in, first out. They've been sold. The remaining will be formed by the last in, which is the last purchase. You start from the last purchase. The second last purchase was in August, and in August we had 3,000 units, and we are left with 5,350. That means 1,350 came from August, and the cost price of those units per unit was 95 rand. So to find the cost price of that, you will multiply 1,350 with 95, and that will give you 128,250. Now, adding this will give us the cost of our closing stock, which will be 488,250. This is a long process, I must say. You could have chosen the other method, but I know most of you will prefer this method because it makes more sense, doesn't it? It it does, it does. Now, what we're going to do to calculate cost of sales, we use that formula I told you. Whenever they say periodic, they're telling you to use that formula. And it starts with your opening balance, which was 554,000. You add your purchases. Your purchases will be 1,685,000. You minus the cost of the returns. And the cost of the returns, if you're wondering where I got that 60,000, it was that 750, which is the number of returns. That includes the damage. You will multiply it by the cost price of May purchases per unit, and that will be 80 rand. Now, when you multiply this by 80 rand, how much are you going to get? What do you get? Doesn't it give you that? It does, right? Then, guys, you can, I don't know why I didn't put the rent value there. Then you can add your carriage on purchases if there was any, and there was no carriage on purchases here. They told you that local farmers deliver the biltong to the storage warehouse for free. So there was no carriage on purchases here. And you will simply minus the value of your closing stock, the one that we just calculated using first in, first out. It'll give you cost of sales, which is pretty much the same. It will be 1,680,750. You dig? That was beautiful, wasn't it? Easy peasy lemon squeezy. Now we need to calculate the actual markup percentage on cost that was achieved by the business for the year ending 29th of February 2024. When we talk about the markup, you need to remember the formula for calculating the markup. What is the formula for calculating the markup? Let's hear from you. What is it? Hmm? It's your gross profit, guys, divided by cost of sales, and then you multiply it by 100%. How do we calculate gross profit? You take your sales, you minus cost of sales. And all of this will be divided by cost of sales multiplied by 100. Sales were 20,300, I think. We sold them at, forgot the value, 250 per kg. So to find your sales value, you will take the number of units sold, multiply them by the selling price of 250. Cost of sales, we've already calculated it. It was 1,680,000. Forgot the other numbers. 680,750. You will divide this by that 1,680,750, and then you times it by 100. Now, how did they get this 5,075? All you had to do was to take the number of units sold, which was 20,300. You multiply it by 250 rand. And our markup here will be 201,95. All right, let's move to knives. Knives, they want us to calculate the number of knives purchased during the year. Guys, once you know the formula, honestly, this is very, very easy, I must say. Now, here for knives, we have to use the weighted average method. You should know the formula for calculating the weighted average unit cost, which is the cost per unit, where you take opening plus purchases plus carriage on purchases minus returns plus customs duties divided by the number of units, which can only be opening plus purchases minus returns minus actually plus gifts or minus gifts. Gifts will not have value. That's why they will only be under the numerator or in the denominator. Okay, because the value will be zero. They were given to us by the supplier. When we talk about gifts, it's not us giving them away, guys. It's us receiving them from the supplier. Now, some people will normally minus the damaged and the stolen and the donations. No, you don't do that. That is because we need the weighted average cost per unit to calculate the value of those. We needed to calculate the value of the stock stolen or damaged or donated if we're not given the price of those. Now, let's check here. We have annual stock take figures for knives where as follows. So they gave us the number of knives and the cost price at the beginning. So but at the end, we have 1,400. The cost price is a question mark. So we need to find our weighted average price per unit, which I gave you the formula. During the year, 600 knives that cost 180 each were returned to various suppliers. In addition, 50 knives were stolen. So guys, these 50 knives, they don't form part of the formula for calculating your weighted average cost per unit. Now we have total purchases for the year. Cost the business 2,502,500. The total carriage on the knives for the year amounted to 18,350. Sales for the year amounted to 12,500 knives, which totals the sales value will be 5,625,000. So they didn't tell us, they only gave us the cost of what was purchased. They didn't give us the number of units that were purchased. So we need to calculate the number of units that was purchased. Oh, this is so nice. Because here, guys, you needed to know what you are doing. Guys, you just have to stick to the formula. Now, what is the formula for calculating the closing stock? Are you aware we were given closing stock here? Let me just refresh your mind. There it is. They told us the number of units of closing stock. They told us how many knives were sold. Do you remember how we calculate the value or the number of units of closing stock? Give me the formula. What is the formula? Opening units. Yeah, you're right. You're right. Plus what? Plus purchases. Minus returns. Minus any damaged, right? They will not form part of units available for sale. So you first have to determine the number of units that are available for sale, right? Your opening here was given to you as 800. Purchases, it was X. Returns, it was 600. There were no damage. Was they damaged? Yes, they were. I think it was 50. There we go. Now you just add or subtract like terms here, which is this and that and that. 800 minus 650. What do you get? You get 150, so it'll be 150 plus X, right? These are the number of units that were sold, that were supposed to have been sold, available to be sold. But we sold 12,500 units. So normally when you take the number of units available for sale and you minus the ones that you were sold, you're supposed to get the closing stock. So when you take X plus 150 and you minus the 12,500, it's supposed to give you that 1,400, which is the number of units of closing stock. So this is our closing stock. You normally take units available to be sold minus units sold. That's how you calculate units on hand or closing stock. Remember what X represents. X simply represents purchases here. So I'm going to stick to the left or the right hand side and just take those two. 12,500. It's 150 minus 12,500. Or you can take them to the other side, okay? You just take that 1,400, you minus 150, and then you plus that 12,500. You are simply isolating X. And this will give you, it's 1,400 minus 150 plus 12,500. It'll give you the number of units that were purchased, which will be the 13,750. There we go. Easy peasy, lemon squeezy, right? Let's go. Let's go, guys. Next question, calculate the weighted average of one knife, guys. The formula, I've been repeating it so many times. Please watch the previous videos as well because I've indicated it there so many times. It's your opening balance plus purchases minus returns plus coverage on purchases plus custom duty. CD stands for custom duty or import duty. It is the tax we pay for goods when we buy them from overseas, tariffs that Trump charged us. Yeah, that will be your custom duty in essence, in short, right? And you divide it by the number of units, which will be your opening plus purchases minus returns plus gifts minus gifts if you return them back to the supplier. Let's work with the values. Now, what are the values here? Now, for us to find that the opening value was 140,000, which was given to us, the purchases, well, the units that go with that were 800 to the purchasers. They gave it to us. It was 2,502,500. You divide by the number of units that were purchased, which was at 13,750. Then you minus the returns, which was 108,000. And the number of units returned were 600. Now, all this information, I'm simply getting it from this here. Everything is here. If you're wondering where I got the value of those knives that were returns, they gave you the value. They said 600 knives that cost 180 each were returned. So you just take that 180, you multiply it with the 600. It'll give you the value of those knives that were returned. And that'll be 108,000. Now this will give us the weighted average cost. Oh, we added courage here as well. Oh, I forget that. They gave us courage on purchases of those knives, which amounted to 18,350. And this will give us the weighted average cost per knife, and that will be 183 Rand. Now, local farmers have indicated from 2025 they will no longer deliver the biltong to the storage warehouse for free and will need to charge 2,000 per delivery for this service. The owner is considering fetching the biltong itself. Explain to the owner what needs to be considered and what the best solution will be. Here, guys, understand that fetching the biltong themselves, they have to buy the delivery, they have to licenses, they have to take into consideration the service and maintenance of that vehicle. They have to find a driver, which they will have to pay every month. There's fuel involved, there is insurance involved, there's a lot involved. So what is the solution? Probably it's cheaper to pay that 2,000 rent. Okay. So let's see what they said here. 3 deliveries a year. Any vehicle purchase, salary, fuel, insurance, etc. will be more than 500 per month. She will have to have purchased the bakkie, that could carry 13,000 kgs and then have labor for this. So that's why you need to employ a driver. There has to be a licensed person. There's a lot when you decide to go and fetch things yourself. Okay. So the solution is just for you to pay the 2,000 rand and save on some costs. Got it? Perfect. Happy. Awesome. Please be on the lookout for question 1B, where I will be just dealing with that. Awesome. Please don't forget to subscribe, like, and share. Let your friends know about this channel. If you will like to have lessons with me, I know prelims are quite close. Read description. That's where you will find me. Okay, thank you for watching. Thank you for your support. I really appreciate it. The numbers are really, really going up, and that is the coolest thing ever. Thank you. Awesome.